Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's prepare the technical update on the cryptocurrencies as we usually do on Mondays and Thursdays. So last time we actually discussed the possible reaction on the support area, since market has completed a first target of the head and shoulders, which is the OP of this ABCD based on the head and right shoulder. Also, it makes an agreement with the fib level, and we actually talked about the possible retracement. Supposedly we said, but let's see whether the market will be able to show the pullback in the way of the ABCD pattern on the intraday charts. Currently, it seems that market stands at 2 week, so it even can't show the 2-leg pullback, and smart market shows some minor bounce and turns to some sideways flat action. On a daily chart here we have at least two moments that looks bearish. First of all, it's of course the appearing of the grabber right there, and so it suggests taking out to these lows this first moment. Second moment, take a look. Once the trend has turned bullish, price action is not. It's creeping down with the MACD predictor line, and take a look, even yesterday's candle even has become the bearish reversal. So you can see move up, creating the top above the previous session and close below the lows of the previous session. This is calls as reversal bar. So these 2 points looks bearish and suggest at least the taking out of these lows. That's why, speaking on the retracement that we initially were considering in a way of the ABCD pattern somewhere to the 2840 area, now has really very small chances to happen. So here, as you can see, some heavy action. Market is a bit nervous concerning the depth sale, as you know. And if in any way that this default will happen, it will be negative for cryptocurrencies, because as we have discussed yesterday in our gold market report, in the previous time when S&P agency downgraded the United States, the drop in the stock market was about 17%. So this time it is more resonance case of the default is debt sale, and as you know, Bitcoin is not the stock market. It is more risky, more volatile, and it means that the drop on Bitcoin might be even stronger, significantly stronger. Besides, overall background that we have fundamentally absolutely doesn't support the idea of the possible rally on the Bitcoin, because we see that the loan conditions in the United States on the banking loans becoming tighter, delinquencies on the credit cards and loans after loans is rising, deposits is flying away on the money market, and only very minor part distributed in favor of the Bitcoin. Those who have actually taken out the deposits on the collapse of the Silicon Valley and First Republic, when we have seen this rally previously, it's mostly on the cash redistribution out from the deposits to the crypto markets. Now, when the situation in general is coming down, they start thinking how to invest, because Bitcoin absolutely do not generate any interest, and they start thinking about maybe short-term treasury bonds or something of this kind. It's because, well, when the disaster has been passed, now in a calm situation you could think where to put your money, and actually that's what we could see. That's why we are actually skeptical on the possible expectation of the rally on the Bitcoin. Besides overall price action, guys, you take a look at this. This is not how the market usually reverses up. We do not see something of this kind. So this is not definitely bullish reversal. That's why in the current circumstances, personally, I do not want to take any long position. And actually, even when the market has reached this level, we're not actually the fans of the possible taking long position. We said you could if you would like to, and you trade on the intraday charts, but for us this is mostly the chance to get short rather than trying to buy it. And currently it seems that's taken together with the bearish dynamic pressure and the daily grabber. I suppose that it might be something of this kind. So this is might be the butterfly with the nearest destination point around 25.30. It's 127 extension. Next will be 1618, but in general, on a daily chart, you could see that the next target of the hand short is the XOP. Because if market will start moving with this butterfly, breaking it down, taking out to these lows, well, this is just butterfly. Maybe will be completed, but in general, we have to take a look at the major pattern. The major pattern here is hand shoulders, and it comes to vital area of 2340, 2440 area. That is also vital for the weekly scenario and for a major upward trend. So to keep the bullish trend intact as we have on the weekly chart, market has to stay above this confidence area. Or let's talk this about the XOP. So once it will be completed, market has to start upward action immediately. This is the only way how the bullish trend could be held on the weekly time frame. So let's keep watching. If you see something bullish on the Bitcoin currently, you could share in our forum as usual. But our opinion is currently it would be better to stay aside from taking any long position.